So, good evening, all. In the last three classes, we have discussed about the basics of insurance and detailed information regarding the IRDA in the last classes. So, today we are going to discuss about the general insurance. So, general insurance, which is not relating to the life insurance. Most popularly, general insurance is relating to the car insurance, marine insurance, liability insurance, fire insurance, engineering insurance, burglary insurance. These all insurances comes under the general insurance. Simple definition relating to the general insurance is which is not life insurance means non-life insurance will be called as general insurance. Then coming to what is general insurance, any sort of non-life insurance policy falls under general insurance. Any policy not relating to the general insurance comes under the any policy not comes under life insurance comes under the general insurance. General insurance also will be called as a property and casualty insurance also. Property or casualty insurance also will be called general insurance. So general insurance covers the property against fire accident, burglary, theft, flood storm, earthquakes, and so on. So general insurance covers relating to the property. Any property is damaged because of fire, because of burglary, because of theft, because of floods, because of earthquakes, etc. All losses comes under the property insurance. It also covers machinery against breakdown, hull of ships, motor vehicles against the damages, etc. So these also comes under not only the property, comes machinery against the breakdown, hull of ships, motor vehicles also comes under the general insurance. General insurance covers almost everything, including your home, car, and health. General insurance covers almost everything, including your home, car, and health. So health insurance also comes under the general insurance. So these policies are easy to purchase online even. Nowadays, we are using many UPA apps like PhonePe, GPay, Beam, etc. In that also you can purchase the general insurance. You are having a car, so want to get an insurance for you want to insure the car, then need not to visit any insurance office, need not to access any broker or the agent. Just open online website of relating to that insurance company, or through you can go for the insurance relating to your car through your UPI apps also. So why we have to go for the insurance? To avoid accidents. So whenever you are riding, for example, you are having a motorcycle, there is a possibility of accident at any time with your mistake or without your mistake. Means others' mistakes also may be cause for the accident. So to get financial security relating to that accident, to get peace of mind against risk of accident, to protect mortgaged properties, to avoid burden of loss. Because of this, insurance will be taken. So to avoid accidents, because of that, something loss will come. There's a financial loss may come, financial security. You get the peace of mind against the risk of accident, risk of loss, risk of theft, whatever. To protect mortgaged properties. Mortgage is nothing but when you are taking a loan, you are mortgaging a property to the banks. So that will be called as mortgaging properties. Then to avoid burden of loss, any loss due to that accident that will be recovered if you have insurance policy. Because of these reasons, insurance will be taken. What is an insurance policy? So insurance means security regarding the unexpected events. What is insurance policy? An insurance policy is a contract made between the policyholder and the insurance company. So making a contract, getting into a contract. So two persons are there. One is the policyholder, second one is the insurance company. So contract between these two will be called as insurance company. When insurance policyholder is getting contract with the insurance company, then that contract will be called as a document will be called as insurance policy. In agreement of paying a premium amount on a regular monthly basis for a certain period of time, a person or his or beneficiary receives coverage. So agreement of paying a premium in equal intervals, maybe monthly, maybe quarterly, maybe half yearly, maybe yearly also. So beneficiaries will receive the coverage. So this is insurance policy. Insurance policy is a document of contract between policyholder and insurance company. Then coming to the types of general insurance, the first one is the auto insurance. Second one is the engineering insurance. Third one is the fire insurance. Next one is the liability insurance. Next one is the burglary insurance. The last one is the marine insurance. They all comes under the types of general insurance, not types of insurances. Types of general insurance. So auto insurance relating to the automobiles, engineering insurance relating to the engineering equipment, machinery equipment, etc. Fire insurance relating to the fire accident, liability insurance relating to the employer liability, then burglary relating to thefting, then marine insurance relating to the ships, etc. So this all comes under the types of general insurance. Relating to the car insurance, it is a mandatory product to buy after you purchase your car. It is a mandatory product to buy after you purchase your car. Without insurance, you cannot run your car on the road. So when you are buying a car, immediately you have to go for the insurance also. Without taking insurance policy on that particular car, you cannot get that car even from the showroom. So mandatory product is the insurance related to buying a car. Then car repairs expenses can be claimed in case of a car accident. So a small accident is taken place, some dents have come, or windshield means glass is broken, then you can get a claim. So only repairable accident taken place. So whatever repair amount occurs, that will be recovered from the insurance company when you are having a insurance policy. So it provides protection against third party liability and physical damages from fire, theft, burglary, riots, earthquakes, flood, cyclones. Because of these reasons, any accident, anything happened to the your car, then recovery will be there from the insurance company. Protection against third party physical damages relating from fire, theft, burglary, riots, earthquakes. Okay, so these are the causes for the loss or the damages. So these damages will be protected by the insurance policy. The next one is the liability insurance. This insurance is purchased to protect an individual or a business. This insurance is purchased to protect an individual or a business. What kind of coverage will be there? What kind of risk will be covered by this policy? Property damages, bodily injury to a third party, being held legally liable for negligence. The property damage, any property have you damaged because of any accident, any reason. Bodily injury to a third party because of your car accident, the person victim is having a damage. So bodily injury is there for the victim. For him also, liability insurance applicable. Then being held legally liable for the negligence. So because of your negligence also some damage is taken place relating to the property and bodily injury to third party. That also covers by the life insurance or liability insurance. It covers legal payouts and the cost for which the person insured would be held responsible. The person who is insured will be held responsible according to the legal payouts and costs. Okay, this will be called as liability insurance. The next one is the marine insurance. Marine insurance refers to coverage provided for the loss or even damage that has been caused to cargo, ships, terminals between their points of origin and final destination. So, ship is traveling from one place to other place, one port to other port. So, their starting point to terminal, that is starting point, terminal to final destination. Anything happened, that particular cargo, ships, then this marine insurance is applicable. So insurance relating to the ship's transportation will be called as a marine insurance. So four types of marine insurances will be there: hull insurance, cargo insurance, freight insurance, and liability insurance. What are those we discuss later. Then coming to the fire insurance, it covers any damage to property as a result of a fire accident, as a result of fire. That accident may be taken because of negligence, may be taken because of any other cause also comes under the fire insurance. It goes beyond property insurance and covers. It goes beyond property insurance and covers the cost of reconstruction, the cost of replacement, the cost of repair. So, a fire accident is taken place. So, total plant, for example, the fire accident taken place in a manufacturing unit, then total manufacturing unit is damaged. Then you have to reconstruct the same manufacturing unit to do the business, to convert the raw material to finished goods. For total reconstruction, how much cost will be involved? That will be recovered by the insurance company when you are having a fire insurance. Then cost of replacement. When machinery met with an accident and a fire occurred, machinery totally damaged, that machinery must be replaced in the factory. For that, how much cost is incurred, that much will be refunded by the insurance company when you are having fire insurance. The cost of repairs. So totally not damage. Some repairs, if you do some repairs, then that repairs are enough to make that machinery particular asset to reuse again. Then repairs cost also will be recovered from insurance company when you are having fire insurance. The loss can be ascertained only after the fire occurred. So before fire occurrence, how much loss taking place, that cannot be ascertained. After fire accident only we can ascertain or estimate the cost of loss. The loss can be ascertained only after the fire has occurred. The insurer is liable to the actual amount of loss not exceeding the maximum amount fixed under the policy. So when you are taking a policy, the cost means how much policy you have taken, how much amount is eligible, how much policy amount is eligible against that property relating to the fire insurance will be fixed by the insurer only, means insurance company only, before giving a product called insurance to the insured person in that particular organization, so that whatever loss occurred, same amount, actual amount of loss will be recovered, will be refunded by the insurance company, or maximum amount fixed under the policy. Your machinery, your plant or the machinery property may be more value, but you may insure with the lesser value. How much you insure, that much you only get it. If you insured for the full value according to the market value, then how much actual loss is taking place, that much will be recovered from the insurance company relating to fire insurance. Coming to the engineering insurance. Engineering insurance also refers to the business insurance, engineering business insurance. It provides coverages. Engineering insurance provides coverages for damage to machinery, business interruptions, stock deterioration, and computers and electronic equipment. So in engineering places, various machinery will be used by the contractor. So that machinery, damage to that machinery, for example, bulldozers, rollers, cranes, etc., will be used in the form of machinery at the engineering sites. Any damage taken place, those machinery that covers by the engineering insurance. Then business interruption. Because of any reason, the work is delayed, in some stoppage of work is there. That coverage of loss also comes under the engineering insurance. Stock deterioration. Deterioration means exaction, మాయమైపోవడము. So whenever stock, their stock deputed in the site of engineering, There some stock is not appearing because of any reason. For that also engineering insurance is applicable. Then in the site, some computers will be established to record the data regularly, and some electronic equipments also will be placed in the engineering place. So any damages taken place, those computers and electronic equipment also covered by the engineering insurance. Then coming to the burglary insurance, insurance provided against the damage in one's residence as a result of burglary theft is known as burglary insurance. Means any in your house, in anyone's house, in anyone's residence, some property, valuable things stolen by someone. So that recover for that recovery, any insurance is taken that will be called as burglary insurance. It provides financial compensation against loss or damage to property contained in your premises by acts of burglary. Because of burglary, any financial loss is taken place, any damage of property is taken place, or any damage taken place to your any property in your premises, then that will be recovered from insurance company when you are having burglary insurance. It is essential to purchase this plan, especially in areas which it is essential to purchase this plan, especially in areas which are prone to theft. Prone to theft. Possibility of theft is more in some places, in some areas. There, there is there. This policy is essential. Which policy? Burglary insurance policy is essential. So, burglary insurance covers cash thefting, valuables because of like gold, silver, diamonds, any ornaments at home or any equipment from the home, etc. Security is kept in the locker safe. Any securities you kept in the locker safe. Sometimes, for example, you keep all your ornaments and important documents in the locker in the bank. There also theft taken place. This burglary insurance will be the insurance covered for the at locker theft. Then cash box in locked steel cupboard. Any cash box you kept in the locked steel cupboard, and by damaging that cupboard, then something is stolen. That cash is stolen by thefts, burglared by thefts. Then that also covers under the burglary insurance. So any property or any damage taken place because of theft and burglary at your residence comes under the burglary insurance. Any loss taken place or any damage of property taken place in the premises because of burglary, that financial compensation will be made by the insurance company when you're having burglary insurance. This kind of burglary insurance is very much essential where areas are, especially areas which are prone to theft. Then this burglary insurance covers cash, valuables, securities kept in a locker, locker safe, and cash box in the steel cupboard. So then coming to benefits of general insurance. Benefits of general insurance. There are many benefits. So if you take the general insurance policy, you will have a peace of mind because a risk is taken by the insurance company. Your risk is covered by the insurance policy. Then investment also taking a policy is kind of investment also. Taking a policy in form of savings also. Taking policies self-dependence. You need not to depend on anyone if you take an insurance policy relating to general insurance. That financial securities also will be there. If anything happens, need to replace, then replacement amount will be paid by the insurance company. You are having a property insurance. Then stability. So you are financially stabilized when you are having insurance policies. These are the benefits of general insurance. People will have peace of mind. The kind of investment, taking an insurance policy is a kind of investment. Then they're taking a policy kind of savings. Taking a policy will give you self-independency. Taking a policy will give you financial security, and taking a policy will give you stability in your financial position. These are the major benefits of general insurance. Then coming to the claim documents. Copy of claim, what does it mean by claim documents? Any damage is taken place, any damage is taken place, then the person who insured has to get a claim from the insurance company, For that purpose, whatever documents need to submit for the claiming purpose, those documents will be called claim documents. Copy of claim intimation given to insurer with a Xerox copy of policy and premium receipt. A copy of claim intimation. So intimation will be given to the insurance company on a paper that will be called as a copy of claim intimation. With that copy, you have to add Xerox copy of policy document. When a policy document is nothing but a contract document between the policyholder and insurance company. That Xerox copy to be added. Then you paid a premium in regular intervals. Those premium receipts also must be added to the claim intimation form. Then coming to the second one, duly filled claim form. Claim form should be filled clearly and neatly. So form should be filled. The second one is the driving license. When you are having an accident relating to the motorcycle with the car, with any other vehicle, whoever is driving that motorcycle or the car has to attach his driving license. Registration certificate of vehicle. So whether if registration certificate is not there for that vehicle, that is legally punishable. So that registration certificate of the vehicle also must be added. Estimator of repairs from repairer and stamped report. So whatever repair shop is there some estimator will be there, estimating person will be there. That person will estimate how much amount is required for the repairs of that vehicle. So that stamped copy of that repairs also must be added with the claim document. Estimate of repairs from the repairs is over. Bills and cash memos of repairs. After getting repairs relating to that vehicle, whatever bills, whatever cash memos of receipts are there, those also to be added. Verification of road tax, whether road tax is paid for that vehicle or not also, that document will be there, has to add that. Police Panchanama, FIR, first information report. After getting accident, first you have to report to the police station nearer to you, nearer to the accident. There you have to get a copy of first information report. That copy also must be added with the insurance claim. Then permit and fitness certificate. So if vehicle is relating to the transportation certificate, transportation vehicle, every year from RTA, Road Transport Authority, RTO, Road Transport Office or Road Transport Authority, you have to get a permit to run certificate and a fitness of vehicle certificate. Those certificates also must be added to which one? Claim document. Other documents depending on which policy you have been purchased. So these are the documents, claim documents. These are the documents duly attached to claim of claim. Okay, na? So this is the claim documents. So these are the insurance companies in India. Some important insurance companies in India: ICICI, Lambert, Magma, Bajaj Allianz Insurance, Future General, Tata AIG, SDFC Ergo, Bharati Airtel, then Reliance, etc. So this is the basic information regarding the general insurance. Again, we have to see glance relating to the general insurance. General insurance is nothing but the insurance which is not relating to the life. What kind of insurance comes under the general insurance? Car insurance will come, marine insurance will come, liability insurance will come, fire insurance will come, engineering insurance will come, burglary insurance will come. General insurance is non-life insurance. Any policy comes under non-life insurance, then that will be called as general insurance. Any insurance which is not falls under life insurance will comes under the general insurance. Any policy comes under non-life insurance also called as general insurance. It is also called as property or casualty insurance. The general insurance covers property against fire, burglary, theft, floods, earthquakes, and also covers machinery against the breakdowns, hull of ships, motor vehicles against the damages, etc. So general insurance covers almost everything, including your home, car, and also your health. For health insurance, we are going to discuss separately in the next classes. Then there, these policies are easy to purchase online. All general insurance policies can be purchased easily online, either entering into the insurance company websites or entering to the any UPI apps having in mobile also. Then, then why should we have the general insurance? There are some reasons: to get financial security, to get peace of mind against the risk, to protect mortgaged properties, to hide burden of loss. So to hide accidents also, this insurance will be taken place. What kind of accident? Any kind of accident like fire, theft, flood, earthquakes, etc. All kind of accidents comes under the general insurance relating to your property, including your home, car, and health. Then, well, first you have to understand what is insurance policy. Insurance policy is a contract agreement, a contract document on paper between the policyholder and insurance company. That will be called as insurance policy. An insurance policy is a contract made between a policyholder and insurance company in agreement of paying a premium amount. So in that contract, agreement will be there for the payment of a premium. Premium is nothing but amount payable by the policyholder to the insurance company for covering risk of loss of insurer, covering loss of policyholder. Okay, so amount of premium on the regular monthly basis. So sometimes premiums of policies will be paid either monthly or half yearly or quarterly or yearly also based on the agreement based on the agreement. Then there are types of general insurance: car insurance, engineering insurance, fire insurance, liability insurance, burglary insurance, and marine insurance. Relating to car insurance, it is a mandatory product to buy after you purchase your car. After purchase of car, there is a mandatory buying of insurance policy relating to that car because that car is prone to accident. So that if you get into an accident, your car will be damaged. Then passengers in that car also may get some injury. Then the person to whom that hits the car, other further person's property like a car or motorcycle, and other person's body also may be injured. To recover all this, to cover risk of all this, you have to have a car insurance policy. Even immediately you are buying a car. Car repairs expenses can be claimed in case of a car accident. Whatever car repairs are taking place of your car accident, that also will be recovered. It provides protection against third-party liability and physical damages from fire accident to your car, your thefting of your car, burglary of your accessories of your car, raids, earthquakes, floods, cyclones. Because of any of these reasons, something taken place, some accident, some loss taken place will be come under the this car insurance. Then coming to the liability insurance, this insurance is purchased to protect an individual or a business. Individual or a business. What kind of coverage will be there for the liability insurance, property damage, property damage, a bodily injury or third party injury, being held liable, legally liable for the negligence. It covers legal payouts and cost for which the person insured would be held responsible. Then coming to the next one is the marine insurance. Marine insurance refers to coverage provided for the loss or even damage that has been caused to cargo ships, terminals between their points or the financial final destination. Okay, so there are four marine insurances. First one is the hull insurance. That's right. So first one is the hull insurance. What is hull insurance is? What is hull insurance is? Hull insurance covers the hull or body of the ship from risk of grounding, coalitions, piracy, sea storms, etc., and will provide financial reimbursement if the ship or its machinery or equipment is damaged in any way due to these events. Okay, so hull insurance, hull means the body of the ship. So any risky like grounding, collisions, piracy, sea storms, etc., because of any reason, the body of the ship is damaged, then coverage will come. That will be called as hull insurance. Second one is the cargo insurance. Cargo is nothing but so you are transporting goods. So cargo insurance is like a safety net for goods while they are traveling from one place to another place in the ship. So ships will be used to transport goods from one place to other place and human beings from one place to other place. Cargo relating to only transportation of goods. When goods are transporting by the ship from one place to other place, any damage is taken place for those goods, any loss is taken relating to those goods in the form of damages, thefts, etc. in transit, then that coverage of policy will be called as that will be called as cargo insurance. The next one is the freight insurance. Next one is the freight insurance. Freight insurance policy provides extra protection to goods during shipment. So, freight insurance is an agreement by which insured goods are unwritten, means protected in the event of damage caused by the risk covered in the policy. So, what is the difference between cargo insurance and freight insurance? And freight insurance is insurance that protects the shipment while it is in the transit. This type of insurance covers the cost of the goods if they are lost or damaged while in the transit. Cargo insurance is an insurance that protects the goods while they are in storage. Cargo insurance, storage insurance, freight insurance, transit insurance. Okay. Then next one is the liability insurance. Then coming to the liability insurance, coming to liability insurance, in an insurance product that provides protection against claims resulting from injuries and damage to other people or property. Liability insurance provides cover any legal costs and payouts an injured party is responsible for if they are found legally liable. Okay, so These are the various insurance coverages. Array. So these are the various coverages under the marine insurance. Hull insurance means body of the ship damages. Cargo insurance is any goods stored in the cargo. Freight insurance means goods are transporting in the transit. Liability insurance is any damages either to the property or body of passengers in the ship. So these four covers under the marine insurance. Okay, hull insurance means ship body, cargo insurance, goods in cargo, freight insurance, goods in transit, liability insurance, injuries to the people or the property. Then coming to the fire insurance, it covers any damage to property as a result of a fire. Then this goes beyond property insurance and covers the cost of reconstruction, cost of replacement, cost of repairs. Reconstruction means construction of the property fully again. Replacement means partly damaged, that is replacement. Repair means repairable accidents. The loss can be ascertained only after the fire has occurred. The insurer the insurer is liable to the actual amount of loss not exceeding a maximum amount fixed under the policy. Then coming to the engineering insurance is also referred to business insurance. So photos have been shown. Engineering is nothing but construction of roads, so dams, so houses, so plants, so etc. So that various kind of machinery will be deployed on the site by the engineers. Any damages to the machinery like cranes, bulldozers, తర్వాత rollers, etc. Then business interruption means some business interruption is taking place, stock deterioration, so raw material, etc. deployed there, but something happened to that, computers and electronic equipment. Coming to the burglary insurance, that is a theft insurance, any damage is taken place in anyone's residence because of burglary and theft is known as burglary insurance. It provides financial compensation against loss or damage to property contained in your premises by acts of burglary. Then this burglary insurance is very essential very essential to purchase this plan, especially in areas of air prone to theft is there. Then this insurance covers cash or valuables, so securities kept in the locked safe, cashbacks in the locked steel cupboard. Benefits of general insurance. Peace of mind will be there. This is one kind of investment. This is one kind of saving. Then this one kind of self-defense. Insurance policy kind of financial security, and insurance policy is a kind of stability. Okay. Then coming to the claim documents, just now, for example, you are taking a motor car policy met with an accident. So when that is accident, you have to claim that much amount or repairs from the insurance company. For that purpose, copy of claim form, with that copy of policy premium receipt, then whatever driver's driving license, car's registration certificate, estimate repairs from the repairer, and bills and cash movements of repairs, verification of road tax, and a police panchanama, or can be called as FIR copy, permit and fitness certificate from the RTAs or RTOs, other documents depending on the policy which have been taken. Okay, these are claim documents. Major insurance, general insurance companies in India is Agma, Bajaj Allianz, Future, General Tata, AIG, HDFC, Argo, Reliance, etc. Then this is the last information. Thank you. So this is the class for the general insurance. Tomorrow we go for, means next class we go for which one? Life insurance. Okay, tomorrow we discuss about the life insurance. So if anybody having doubts, can clarify class.